If we look at Bitcoin and model it as digital gold, the market cap goes to between 10 and 20 trillion. So if you consider digital property, that's $100 to $200 trillion addressable market. So I would think it goes from 10 trillion to 100 trillion as people start to think of it as digital property.
What does that mean in terms of price per coin?
At 500,000, right? That's a $10 trillion asset. At 5 million, that's a $100 trillion asset.
So you think it crosses 1 million, it can go even higher?
Yeah, I think it keeps going up forever. I mean, there's no reason it couldn't go to 10 million a coin.
Michael Saylor is the co-founder and CEO of analytics firm MicroStrategy, currently the public company with the largest Bitcoin holding. Saylor himself is a Bitcoin billionaire and one of the most prominent faces in the crypto community. Through every one of his tweets, speeches, and interviews, it is evident that the American entrepreneur and businessman has a brilliant mind and is very passionate about Bitcoin. In a recent interview, Saylor describes the long-term growth path he envisions for Bitcoin, the world's largest crypto asset. Saylor predicts that Bitcoin will hit $500,000, then $5 million, and climb even higher. When asked for a long-term price prediction per coin, he assuredly states, "I think it keeps going up forever. There's no reason we can't go to $10 million per coin." He adds that Bitcoin is digital gold, far better than gold, digital property, and digital energy. And it will replace many other asset classes dependent on the US dollar, which is being rapidly inflated away. The more investors realize how defective asset classes like bonds, commercial real estate, and fiat currencies are, the faster they run to Bitcoin, potentially driving up its price. We will now take you to Michael Saylor's interview. But before we do, please take a little time to give this video a thumbs up and subscribe to the channel. Thanks, and enjoy the video.
So Bitcoin price has gone through quite a roller coaster. What do you think is the high point it's going to hit?
I think it'll go up forever, right? I mean, I think the Bitcoin is going to climb in a serpentine fashion. It's going to advance and come back, and it's going to keep climbing. I think that the volatility attracts all the capital into the marketplace. And so the volatility makes it the most interesting thing in the financial universe. It also generates massive yield and massive returns for traders. And that attracts capital. Like we're talking about the difference between 5% return and 500% return. The fast money is attracted by the volatility. The volatility has been decreasing year by year by year. I think that it's stabilizing. I don't think we'll see as much volatility in the future as we have in the past. If we look at Bitcoin and model it as digital gold, the market cap goes to between 10 and 20 trillion. But gold is defective property. Gold is dead money. You have $1 billion of gold that sits in a vault for a decade. It's very hard to mortgage the gold. It's also very hard to rent the gold. You can't loan the gold. No one's going to create a business with your gold. So gold doesn't generate much of a yield. So for that reason, most people wouldn't store $1 billion for a decade in gold. They would buy $1 billion of commercial real estate property. And the reason why is because I can rent it and generate a yield on it that's in excess of the maintenance cost. So if you consider digital property, that's $100 to $200 trillion addressable market. So I would think it goes from 10 trillion to 100 trillion as people start to think of it as digital property.
What does that mean in terms of price per coin? At
500,000, right? That's a $10 trillion asset. At 5 million, that's a $100 trillion asset.
So you think it crosses 1 million, it can go even higher?
Yeah, I think it keeps going up forever. I mean, there's no reason it couldn't go to 10 million a coin, right? Because digital property isn't the highest form, right? Gold was that low frequency money. Property is a mid frequency money. But when I start to program it faster, it starts to look like digital energy, and then it doesn't just replace property. Then you're starting to replace bonds. Right? It's 100 trillion in bonds. There's 50 to 100 trillion in other currency derivatives. And these are all conventional use cases, right? I think that there's 350 trillion to $500 trillion worth of currency derivatives in the world. Mm-hmm. And when I say that, I mean things that are valued based upon fiat cash flows. Any commercial real estate, any bond, any sovereign debt, any currency itself, any derivatives to those things, they're all derivatives, and they're all defective. And they're all defective because of this persistent 7 to 14% lapse, which we call inflation or monetary expansion.
Saylor also talks about some of the risks associated with investing in Bitcoin. He explains that the risk today is far lesser than it was a few years ago. There was a high risk that it would be hacked or someone would design something better and more appealing to investors. 13 years down the line, nothing remotely close to these things has happened. Please listen to Saylor's explanation.
We're 13 years into this entire activity. I think the risk has never been lower. If you look at all the risks, right? The risks in the early years is the engineering protocol proper? Like 1 megabyte block size, 10-minute clock frequency, cryptography is first, will it be hacked or will it crash? 730,000 blocks and it hasn't crashed. Will it be hacked? Hasn't been hacked. But it's a Lindy thing, right? You wait 13 years to see if it'll be hacked. But on the other hand, with $1 billion, it's not as interesting a target as it is with 100 billion. And when it gets to be worth $1 trillion, then it's a bigger target. So the risk has been bleeding off over time as the network monetized. I think the second question is, will it be banned? You couldn't know. It literally could have been banned at any time, many times early on. In fact, in 2013, I tweeted on the subject. I thought it would be banned. I made a very infamous tweet.
Yeah.
I thought it was going to be banned. In 2014, the IRS designated it as property and gave it property tax treatment. Okay, so they could have given it a tax treatment where you had to pay tax on the unrealized capital gains every year, and it probably would have crushed it to death, right? So it could have been in any number of places banned by a government, but in fact it was legitimized as property. And then the question is, would it be hacked or would it be copied? Will it be something better than that? And it was copied 15,000 times. And you know the story of all those. And they either diverged to be something totally different and not comparable, or someone trying to copy a non-sovereign bearer instrument store of value found that their networks crashed to be 1% of what Bitcoin is. So now we're sitting at a point where all those risks are out of the way. I would say that year one of institutional adoption is it started August 2020. That's when MicroStrategy bought $250 million worth of Bitcoin, and we put that out on the wire. We were the first publicly traded company to actually buy Bitcoin. I don't think you could have found a $5 million purchase from a public company before we did that.
Like all new technologies, Bitcoin is expected to hit a few rough patches before it gets widely adopted. But given how important it will be to the development of many key sectors, there is no doubt that owning the crypto asset will be very beneficial down the line. What are your thoughts about Saylor's interview? Ensure you drop them in the comment section below. Also, remember to give this video a thumbs up and subscribe to the channel. Thanks for watching.